Welcome back, guys. If you're a serious business owner who wants to keep advancing to the next level, you need a system to keep track of your profit and loss and balance sheet of your different companies. I just said two different terms that you need to understand the basics of. Profit and loss is your income or revenue minus your expenses. And balance sheet is all your assets or things that you own, like cash, real estate, furniture, minus all your liabilities or what you owe, like loans or credit card balances. That will give you your equity in that company, which is what you're worth. QuickBooks Online is a system that keeps track of your numbers, and your numbers are a foundational piece of your business success. And a foundational piece of my success is you hitting that like and subscribe button. This isn't your run-of-the-mill QuickBooks Online tutorial. It's more of your simple, practical guide as an active business owner. I know people who are scared to use QuickBooks because it seems overwhelming with too many steps, and I'm a big advocate of keep it simple, stupid. QuickBooks is an invaluable tool, and you're going to be surprised at how easy it is when you focus on the important parts. I have 8 QuickBooks company files. Each multifamily property that I own has an individual company file. My S Corporation, Vault Brokerage, which handles my entrepreneurial activities, has its own file. And even my personal activity has its own file. If you have it divided, then you can easily keep track of your financial journey and make more informed strategic business decisions based on the numbers. Even if it's just you, having a company file for you personally gets you started in a good direction. My process is nuanced, and it's important to understand how it flows together in an easy way. The key to QuickBooks Online is using it jointly with your accountant or bookkeeper. If you don't have one, it can be a good idea to get someone to help you limit your tax liability and keep you organized. There are 2 main objectives of using this program. The first is understanding the practical elements of your financials. Basically, am I making more money than I'm losing, and is that enough to support my lifestyle and the growth that I want? And the second is having a tax professional who organizes your numbers for the IRS and minimizes your tax liability, or what you'll owe the government. Let's go check it out at my desk. I mainly use QuickBooks just a few times a month for my business. Once when I insert financial data for each of the 8 companies, which takes me about 3 hours total, and once a month I meet with my accountant for another 3 hours or so to review and correct my data entry. So 6 hours a month gives me a solid understanding of my financials. Each company file that I create should be connected to a separate bank account. So typically, one company is connected to one bank account, which allows me to see the income and expenses clearly for each. I use a separate bank account and debit card for my personal use. Whenever I'm out and about and gonna make a purchase, I think to myself, is this a business expense or is this a personal expense, and which business does it apply to? I then use the correct card that is associated with that charge. True mastery over your numbers means understanding QuickBooks, but also in sync with your bank accounts, which is the more daily checkup for me. Every single day I analyze my bank account's income and expenses to make sure they align with my overall vision. So let's dive into one of my company accounts to understand how to use the program in a practical way. Alrighty, here we go. We're diving in. So this is the QuickBooks dashboard, and it shows you a summary of the main categories. We've got profit and loss here, expenses, income, and bank accounts. The bank account will match up to any actual bank account that you've put in here. So here I use Wells Fargo. This is the bank balance right here at $114,000. In QuickBooks it shows at $130,000. The difference is the charges that I haven't yet entered in here. All right, so on the left here we've got our different categories, and we use about 5 of them, which are the banking feed, expenses, sales, reports, and accounting. Those are the main ones that we're gonna focus on, and right now we're diving into banking. So we click on it. All right, so first step is linking the account if you haven't already. If it's your first step, you need to click on link account. I'm already there at Wells Fargo, but if you have a different bank, you click here and you enter in your bank. So then all those charges from your bank are gonna feed in here, which is extremely convenient and different than the old QuickBooks desktop. This is QuickBooks Online, and it makes it way more efficient. All right, so we see here that there's 28 charges outstanding. So we need to insert in these different charges. So here they are. We see we see a farmer's insurance, we see this dispense Annie's. This is a property, and there are different property repairs or landscape, mortgage payments that we need to insert in. All right, so if we click on a check, this 1359 one, since if I don't remember what it is, I need to look at the actual bank account, and then once I see the name, I write it in. Then we're on category, and I'm gonna type that in. So if right now it's on repairs and maintenance, but if it's something else, if it's landscape or mortgage or tenant relocation, we're gonna enter that in. All right, so once it's there, we click add, and then we keep going through. C&S Nursery, so I type in C-S Nursery. So it's not there, so we click add. There we go, save it. This is a repair and maintenance, so I'm gonna click add. All right, so we're gonna go through all of these until it's done. Or a simple way of handling it sometimes is you go to all transactions and you can click on recognized, because QuickBooks learns as it enters in the different charges, and we can click recognize. So I already have completed that, so there's nothing there, but we're gonna enter in all these charges. Oh, and really important is if you're not sure what to enter in for a certain category or vendor, you can always put here in the category, ask my accountant. That way, your accountant can figure it out later. That's kind of the default if you get stuck. All right, cool. Okay, so once we've entered in all these charges, we now need to reconcile. What is reconciliation? Basically, QuickBooks needs to confirm that it matches your bank statement. At the end of the month, your bank mails or emails your monthly statement that shows all income and expense charges. QuickBooks is just organizing your bank statement into reports for you to review and analyze. That is all it's doing. I reconcile once a month, usually on the 10th of the current month. I do the previous month. And then the day after I do it, I review my work with my accountant and print out the reports. I've also been reviewing my YouTube analytics, and you aren't hitting the like button enough. So leave a comment and hit subscribe. It'll help me out a lot. Anyways, by organizing your bank statements with QuickBooks, it gives you the power to analyze your financials more in depth. But it also gives your tax professional access to these reports to minimize your tax burden, because that is their job. Our tax code is unbelievably complicated with loopholes galore. Make sure you find a trustworthy, intelligent accountant that specializes in your specific field of work. Accountants can be similar to attorneys, which means they sometimes charge an arm and a leg. And more money doesn't always mean better quality. Trust me, I've experienced both, and it's important to find the right fit for you. $100 to $150 an hour is the range I pay. Don't mess with $300 to $500 an hour at the beginning. All right, let's walk through reconciling. Alrighty, here we go. So, we're at our dashboard right here, and we're gonna click on Accounting, Reconcile. There we go. We're gonna resume reconciling, edit info. So this is the tab you're gonna see. You're gonna need to get your bank statement from whatever bank you're at. You're gonna open it on either email or print it out, and you're gonna look at it and see the beginning balance here of $125,000. And then I'm gonna look below that and I'm gonna see whatever it is. And I'm gonna enter that in, and then the ending date. Click save, and it's gonna pop up. And here it shows that there's a difference of $4,478.80, which means I did something incorrect in the banking feed and I didn't enter the charges in correctly. So from here, if I'm meeting with my accountant the next day, then I don't need to do anything. They'll figure out what went wrong. It's okay if that happened. All right, so we're gonna save for later. And reconciling is done for us for right now. Next step is a different thing altogether. So this is a property. If I have 5 tenants on it and one of the tenant leaves and I need to enter in a new tenant's information, so I have a new customer, I'm gonna go to sales. I'm gonna go to invoices here. This shows me who owes what. And if I wanna create a new invoice, I click here. I put in their name, John Smith, enter in an email, the invoice date of when they're starting, product or service, rental income or whatever, rent, here it is, category is already there, whatever the rent is. Good. And then what we can do is we can hit on make recurring, which will allow it to just automatically populate on the first of the month. So if I click on make recurring here, I can schedule it based on what you need. And for me, it's on the first. All right, cool. Yes. So now I'm on invoices and I see what is owed to me. And if I see in my bank account that someone has made a payment, then I can receive a payment, and that's right here. So I click on it. If they paid me electronically, I'd type in e-check. If they gave me a check, then I can type in check, put in the check number, 120, and the amount that they gave me, $3,400. Make sure it corresponds to the invoice and hit save and close. All right. So, that's that. When I first started doing business nearly 10 years ago, I had no sense of the numbers. I was nervous that if I looked at them, I'd feel stressed out by the money I was losing. I even hired an employee to do QuickBooks for me, and it was a disaster. Because nobody cares as much about your money as you do. Several times I almost ran out of cash because I didn't pay attention. That was my first experience with the fear of losing everything, which is terrifying and makes me sick to my stomach remembering. Don't feel bad if you're in that place. It's your choices moving forward that matter. Everything works out in the end. If it hasn't worked out yet, then it's not the end. If you're feeling slightly overwhelmed, a good place to come back to is reminding yourself of money in and money out. Everything fits into one of these two categories and it allows your brain to reset. For me, I move fast in business and I'm constantly moving capital to different ventures, so it's important that I'm on top of where my money is. And the way I do that is with the reports section. All right, so we're back to the dashboard again and we're going to the reports section. Click on it. All right, there's two main sections here. There's the balance sheet and the profit and loss. Those are the ones to focus on. Let's start with the profit and loss, which again is the income and expenses. So let's start at the top. We need to choose the time period that we want to look at. We can look at the last month. We can look at the last year. We can customize it however we want. So I'm gonna do this year to date, right here. All right, and we click Run Report, and there we go. 1/1 through 12/9. That's right now. And then we click on, we see here the income, and we see rental income of $97,137. That's what we've collected from the tenants for the year. Then we're already at expenses because it's just the tenants who are giving us money for this company file. Expenses. We've got business license and permits, bank service charges, insurance expense, mortgage interest, professional fees like accounting and legal, property management expense, repairs and maintenance, that was a big one. And then after income minus expenses is the net operating income, our net income basically. So that's negative $38,467. Why is that negative? Well, it's because the repairs and maintenance were pretty high, but that was improvements that we did on the property. So that's where we're at. Cool. All right, next report is the balance sheet. And that's our assets minus our liabilities. What we have minus what we owe. So first thing that's an asset is the bank account. The money that's in there is our money. So you see it, 130,000. Then we see an impound account. That is an asset again. And that is what the lender is holding to pay for property tax and insurance. And we're paying a portion of that in our mortgage payment every month. That was in the agreed upon loan. All right, then we're at other assets, what we paid for the property. Right here, purchase price, other improvements that we've put in, closing costs. This is all money we've put into this property, and that total is $1,137,000. All right, now we're at liabilities and equity, and that's basically what we owe. So we've got the tenant's security deposits. There we go. We owe that back, even though they gave it to us, to hold on, to make sure that they don't ruin the place. And our mortgage, our loan, $999,698. That number is slowly going down every month as we pay a portion of the principal. We also have a second mortgage here of $153,000. And we have our contributions, basically what the shareholders put in, right? So I've put in $383,000, and I've taken out through a draw $283,000, and that's the loan. That's the refinance, the new loan that I got. I took out cash so I can see what I put back into my bank account. All right, and then we've got the other shareholders and our total equity, which is the all assets minus all liabilities, is this number of $59,000. It's pretty low. Why? Well, for a few reasons. One is this doesn't take into account appreciation. What is the property worth now? It doesn't pay attention to that. It also is low because we took out part of our money with that cash out refinance. So these are reasons why that's at $59,000. All right, cool. That's what we got. We did it. I really hope this has been useful for you. It's a more practical approach with a real-world example of a 5-unit apartment building. QuickBooks is one of my framework tools for succeeding in business. It helps me stay organized and on top of my projects. Because without proper accounting, our odds of success goes down, and it's already hard enough. If you have more specific questions, let me know. Hit that like and subscribe button, and I'll catch you later. Peace.